Good morning and welcome to the Daily Rep from Pepperstone. It's the 19th of July 2017 and I'm Darren Sinden. Let's move on and have a look at overnight changes, any price moves we need to be aware of. And on the table today, I've just decided to focus on a couple of items. Firstly, dollar index, as we talked about yesterday morning, the dollar very much under pressure. Dollar index did close off the lows in New York, but nonetheless still very weak. And as you can see, down almost 7.5% year to date. But going the other way, the euro finished in New York at 115.54. That was up 0.7% on the day and bringing its yearly gains to 9.9% against the dollar. But we mustn't forget the Australian dollar finished in New York at 79.16. That was up 1.5% on the day and up 3.6% on the week, 9.8% year to date against the dollar. So that's certainly gathering momentum, that move, as we'll see a little bit later. Okay, let's have a look at events on the calendar. Anything that may move the market that we need to be aware of today. It's a bit of a mixed bag today. Not much in the way of important data, but there is still stuff to be aware of. We start the day really properly in the States with housing data, MBA mortgage applications, housing starts and building permits for June, and that data coming out at 11 o'clock GMT for the MBA mortgage applications and then 12:30 GMT for housing starts and building permits. Later in the afternoon, around 14:30 GMT, that's 3:30 London time, we will have crude inventory change from the 14th of July. It's obviously very important. We've seen some big swings in inventories recently, and they've directly affected the oil price, which in turn has a bearing on inflation, which everyone's watching at the moment. And then to finish the day at close to midnight GMT and almost 1 o'clock in the morning London time, we'll have merchandise trade balance from Japan and imports and exports as well. So some important trade balance data out of Japan to bring the trading day to a close. Okay, let's move on to have a look at the breaking news and comment that's caught my eye overnight. The first headline, trade talks between China and the US commence again in Washington. This happens as news breaks that the Chinese holdings of US treasuries have climbed to more than $1.1 trillion again. The Chinese are the second largest holder of US debt instruments after Japan. But they had sold their holdings down, but they're now building again, it would seem. Staying with things at Asia Pacific, Australian banks led Asian Pacific equities higher yesterday, or this morning I should say, as new capital ratios were announced for the banks. They're more lenient than were expected, and for example ANZ and Westpac both gained around 4% in today's session. Back to America, and President Trump is said to have had a second off-camera meeting with President Putin at the recent G20. Apparently this wasn't disclosed, and people are now questioning what was said at that meeting and why there wasn't a fuller disclosure. Right, we spoke about the Aussie dollar at the top of the programme. Let's just take a look at the chart. This is a weekly chart, but I think it exemplifies where we stand. Strong rally that we've seen through May, June and July. We've now broken above some key resistance in here. The potential, of course, now is to press on above 80 and perhaps take out these highs from May 2016. The only thing to say is that on a RSI 14 basis, at least on this long-term chart, we are looking potentially overbought. So whilst the momentum can continue, there is a chance that we could pull back from here before perhaps running on again. Right, food for thought, something to us to take away into the trading day. And I decided to focus on oil once more with the inventory data coming out this afternoon. But this is a longer term question. How quickly will the adoption of electric vehicles or EVs damage the oil price? OPEC itself has predicted that 22% of new vehicles will be electric by 2040, but Bloomberg believes that figure could be as high as 25%, and Morgan Stanley had predicted that electric vehicle sales will be greater than petrol vehicle sales within 2 decades. And the chart here shows you the speed at which 2016 forecasts have outstripped 2015 forecasts. Thank you for your time. Please take a moment to read through the risk warning. Trading CFDs and FX on margin can be a risky business. If you're in any doubt about those risks, please contact your Pepperstone account executive.